Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to another episode of Trends with Crypto. Welcome to another episode of Crypto Benefits. No, that's not it. Welcome to another episode of Trends with Benefits. Crypto. Our crypto education continues. I am super fortunate to welcome Lauren Abendschein, head of U.S. institutional sales at Coinbase. Coinbase, as you may know, recently went public. It's part of the Van Eck story that we've been telling around these companies that are helping to transform our economy, digital transformation companies. Coinbase is one of the leaders there, really helping to build the digital economy and the crypto economy. So I'm really super excited to talk to Lauren about how exchanges work and the perspective that she has working with institutions as well. So Lauren, thank you very much and welcome.
Thanks so much for having me, Ed. Delighted to be here.
You know, I'd like to generally start out with a little bit of background because I was looking at your bio and I noticed that you didn't go straight into crypto. You actually had some background in traditional finance. You were at Credit Suisse before?
Yeah, that's exactly right. I spent the better part of a decade in prime brokerage, which has ended up being, a wonderful primer for my experience here at Coinbase. That I started in Hong Kong doing capital introductions, so connecting hedge funds there with global allocators, and then moved to San Francisco to do prime brokerage sales. And while I was doing that for Credit Suisse, I got my MBA at Berkeley's Haas School of Business and ended up taking the first blockchain class there at the graduate level. So really afforded me the opportunity to meet sort of the who's who and hear from, I would say, crypto royalty and get really immersed into the actual tech. I was already enthusiastic about it as an asset class, but really learning about the potential of blockchain and crypto as a technology was extremely inspirational and a great way to get started in the industry.
Yeah. So you joined when? August 2018, right?
That's right.
So Bitcoin had peaked with December 2017, just around 20,000. By the end of 2018, it had fallen to 3,200 or so. Any second thoughts about your choice in career?
Well, again, this is where coming into Coinbase with a deep appreciation for crypto and sort of the fundamental changes that it could create really helped me keep the faith. It's true. I joined right when Coinbase was launching custody, and we expected an influx of new sort of traditional institutions to come in. And so when we saw that massive sell-off, over a period of months, there was definitely a moment of, is it going to be feasible for institutions to come into this space? But having that long-term conviction really kept me and I think our entire team really solid through that period and gave us the opportunity to put our heads down and build.
That's great. So, you had bought into it, you had a strong conviction and stuck with it. How would you characterize the changes that you've seen or experienced since you've joined in the crypto space, either just in terms of developments that have happened, types of participants, types of products even?
Sure. So when I joined, the participants were really, a wide array of individuals, crypto-focused funds, there's some leading venture funds and market makers as well. Like I said, we expected to see, a large number of traditional institutions come in. But 3 years ago, the challenge was really that sort of operational due diligence. Institutions were asking, is there really a qualified custodian in the space? Market fragmentation was a challenge, being able to execute in size. And institutions were trying to figure out where crypto really belonged in their portfolio. And so I think that kept a lot of groups on the sidelines. Meanwhile, there was an absolute influx and, enthusiasm from, again, those individuals and crypto-focused funds. And I think that, focus led to a period of maturation, through to 2020, where you saw adoption by large venture capital firms in particular, who by virtue of their adoption in the space also exposed their limited partners. So we saw endowments, pension funds, a wide variety of allocators get to know crypto through the lens of their allocations to venture funds or even to crypto dedicated venture funds. And I think that really contributed to crypto arriving as an institutional asset class in 2020.
Yeah, we've heard a lot, and I hear it a lot in the media, and we've used other data points like the growth of futures trading and liquidity about institutional adoption. And I think that's important for a lot of people in the market because it's a sign of, wider usage with the wider adoption, something that will become more, persistent. What does Coinbase's institutional makeup look like? I mean, we've heard about the nearly 60 million verified accounts. How much of that is retail? How much of that is institutional?
Yeah, so today we have over 9,000 institutional clients on the platform. And these range from the leading hedge funds out there. For example, in our most recent shareholder letter, we announced Third Point was on our platform. We also work with corporates. We've done case studies on MicroStrategy, but we also power a lot of businesses. So through our Introducing Broker platform, we're powering banks and brokerages and wealth managers. So that's an important part of our institutional client base, as well as leading venture capital firms, crypto hedge funds, and of course, direct end investors as well, like endowments, foundations, and others. So we have a wide array and sort of a front row seat into institutional participation and the way that institutions have evolved in their thinking around this asset class.
I'd like to kind of take a step back. We have an audience of individual investors, some professional investors as well. But to kind of set the base level, if you will, of understanding, at the very basic element, what Coinbase is a crypto exchange, right?
So today we have our dedicated crypto exchange, and this is a well-known massive exchange that leads the market in terms of liquidity, regulation, and it's how a lot of users come to know us, both on the individual side as well as on the institutional side. We also have our Prime broker. So Coinbase Prime offers smart order routing across a variety of venues, algorithmic trading, and is built directly on our custodian. So we have multiple lines across institutional and individual trading.
Right. And the Prime brokerage would work with certain institutions, right? Or hedge funds and certain endowments and things of that sort.
That's exactly right. As well as introducing brokers, powering other businesses, corporates. We work with a wide array of institutional participants.
If I go back to the exchange, just perhaps briefly or generically, how does an exchange, a crypto exchange, work from the perspective of an individual user wanting to go trade crypto on an exchange? What do they need to understand about the inner workings of that exchange?
Absolutely. So a crypto exchange actually looks in many ways like a traditional exchange. It's a central limit order book. The big difference, one of the big differences is that individuals can, directly interact with the exchange. At Coinbase, we specialized in creating easy access points for individual investors, whether they are more advanced traders who want to interact with the exchange directly, take advantage of our charting and directly interact with the order book, or whether they want to interface with us through our retail platform. I think one of the misconceptions about trading in crypto is that you're going to have to interact with the blockchain and there's a lot of risk associated with it. The fact of the matter is that trading actually happens in our internal ledger. The blockchain only comes into play when you're transferring assets on and off of the platform. So I think that's an important thing for people to understand when they think about engaging directly with crypto exchanges.
What does that mean? You're trading really only with the internal ledger. I mean, you're trading with other people on that platform. Is that right?
That's right.
It's kind of a brokerage and an exchange together, the way it kind of operates, right?
Yeah, that's exactly right. And the real difference is the asset class itself, the potential for getting involved in staking or different types of participation, for learning about an evolving asset class. So that's really where I think the differences start to come into the investing experience.
Why do you think other say traditional brokerages haven't offered crypto?
Well, it takes a lot of expertise to actually be able to offer crypto out. And one of the big trends that we see is brokerages coming to us and saying, how can I start to use your services to power a crypto offering of my own? There's a widespread recognition that consumers are really interested in engaging with this asset class. But it is, at the end of the day, a digital bearer asset. So it takes a lot of investment in security. It's also a very fast-moving asset class. Like I mentioned, things like staking have become an increasingly important feature. So I think, if you look years down the line to, the banks and brokers that, continue to advance here, it's going to be through partnerships with established players like Coinbase who can make the investments in technology to stay at the cutting edge of this asset class and offer out the most advanced capabilities.
When you mention staking, what do you mean by that? Kind of in no jargon terms.
Yeah, so in no jargon terms, staking is simply being able to participate in the security of a crypto network by pledging your assets in return for rewards. And there are a wide variety of different types of staking, but that's sort of the simplest way of describing it.
When selecting an exchange to work with or a platform to work with, what do you think are some of the important factors that investors need to consider?
So there are a few really important considerations here. First of all is just trust. The leading exchanges out there have done the work to publicize and explain their trading rules, the way that they operate. This is a really important component, is just establishing that trust. And then things like compliance and transaction monitoring. You can look at licensure, banking relationships as good indicators of how an exchange is run. But it's really important that the exchange carefully undergoes KYC for all users, makes sure that there's self-trade prevention, that sort of core blocking and tackling that ensures that the liquidity that you see on that exchange is real. Security, of course, in crypto is paramount, having an established track record, but also the resourcing to invest, as I referenced earlier, the resourcing to invest in a fast-moving asset class. When you talk about adding new crypto assets, it's not just about simply, complying with regulation. It's also a matter of ensuring that you're safely offering out those assets. Really being able to invest in adding assets in a safe and secure way is important, and protecting them with leading key management capabilities. Speaking of assets, definitely having a breadth of assets available. It's incredible how fast new blockchains or new crypto assets pop up, and it's really important to have an exchange that can continue to offer assets for trading. And I'd say asset protections. So it's not just about security, but also having insurance and a large balance sheet to ensure that there's adequate protections. Finally, I think innovation, as I referenced, not just adding assets, but enabling participation with those assets. Staking, voting, those sorts of things become really important, and product breadth in general.
When you talk about adding assets, I assume you're talking about like adding new trading coins or trading pairs or what have you. What goes into the evaluation of what to add to the platform? What new coins you might want to add to the platform?
Yeah, at Coinbase, we really try to be asset agnostic. We don't want to pick winners and losers. We don't want to suggest, what you should invest in. Instead, it's really in line with our mission of creating an open financial system for the world. We want to create a platform where our clients can come and interact with crypto assets and can get access to hold or trade the assets that are interesting to them. So we take a really thoughtful approach to considering how best to list an asset. So our standard listing framework includes ingesting information from our asset issuers around their own network, but also doing our own due diligence. We have strict criteria around security, but also legal and compliance. And part of that is driven by a group that we helped launch called the Crypto Ratings Council. This is an industry effort to analyze what might or might not be considered a security and apply a rating to it on a scale of 1 to 5. I think it's a great example of industry self-regulation and endeavor to really take a proactive approach to being compliant.
That's interesting. So that council evaluates whether or not a certain coin would be a security. Is that just basically to stay on the right side of securities laws and that you're not offering securities?
That's exactly right. Yeah. And the effort there is recognizing that we're not a securities exchange, to try to ensure that the assets that we do list are compliant and to take a industry-informed view on what might or might not be a security. So we think having a collaborative approach to that has been really valuable, and I think it's a good standard setting for the industry.
Have a lot of the obstacles that perhaps have prevented institutions up until this point been addressed or taken care of? I mean, what are still some of the remaining obstacles that you find in talking with institutions who want to provide crypto exposure to their own client base?
Yeah, that's a great question. If you'd asked me this 3 years ago, the sort of big focus was custody, solving custody. Is there a qualified custodian? Meaning, is there a custodian that complies with the custody rule, which institutions have to, rep to compliance with in order to, manage effectively other people's money. And the good news here is, I think that has really been put to bed. Coinbase is a New York limited purpose trust company regulated by one of the toughest banking regulators globally, the New York Department of Financial Services, as are a number of other crypto custodians in the space. And that's been, I think, more than satisfactory in terms of complying with the custody rule. But I think the biggest indicator of whether due diligence and sort of institutional structures are there for institutions is just widespread adoption. I mean, I can point to our public statements alone. In our shareholder letter, we announced partnerships with PNC and Tesla, Third Point, Wisdom Tree. I mean, I don't think that you would see this type and this level of institutional adoption if we hadn't settled so many of these core questions that institutions had about security, operations, regulation, and those kind of key issues. So 2021 has just brought widespread institutional adoption in many ways because of that cementing of the offerings available to institutions.
Given your background in prime brokerage, how would you characterize the state of prime brokerage in crypto versus what you were used to in kind of traditional finance? Is it robust enough to support institutional needs, to allow for routing to different exchanges? Because crypto is pretty fragmented, all these different exchanges that are out there. How would you characterize that comparison between traditional and crypto and prime brokerage?
Again, I would point first and foremost to the proof point that there are so many large established hedge funds that are comfortable getting into this space because prime brokerage is here for them. So to make prime brokerage work in crypto, you need first a trusted and established custodian. Second, the ability to route to multiple exchanges and liquidity providers using sophisticated algorithms. And crucially, real intermediation of that routing. So the ability for your prime broker to put their assets on all of those different exchanges and back them up so that you can seamlessly route and get the best available price in the market. And then it wouldn't be a prime broker if there wasn't financing involved. So combined with robust financing, both sort of short-term for settlement, as well as portfolio leverage and shorting, you really get the full package that hedge funds and other institutional investors introducing broker clients really require to get into crypto and to trade in size and to engage in price discovery. So I think it's safe to say that we've arrived, and the widespread adoption that we see is a clear evidence.
How do you think about regulation? I mean, that's a hot topic these days right now, regulation in crypto as being, do you think that would stymie innovation or actually provide the guardrails that will actually spur further adoption and growth?
So, regulatory uncertainty has been a watchword for years now. That said, we have and continue to work with regulators for really creating smart regulation. And I don't think that there's as significant an overhang, in terms of concerns or issues with regulation in crypto. I think there's a wide array of sort of complex considerations here, but at the end of the day, institutions are sufficiently, I think, comfortable with the current state of regulation to be willing to move into this space. And for that reason, while there are plenty of things that are fast evolving, at the end of the day, I don't think that regulation is significantly, or the lack thereof, is significantly impeding adoption.
Perhaps one day in the future, do you think that traditional stock exchanges have something to worry about from the crypto exchanges?
Yeah, so it's a really interesting question. One way to think about it would be, is there a 10x improvement to be done, by listing stocks versus sort of the current way that stocks are traded and cleared? And I think that's an open question. One thing, in my personal opinion, that I think we would likely see down the line is the potential to leverage tokenization. So not just to simply list a stock, but rather to think about how can we leverage the power of tokenization to split up, say, large securities and give lots of small holders easier and less expensive access. There are a lot of possibilities, I think, that crypto unlocks in terms of tokenization and securities. And I would imagine that we'd be more likely to see development there rather than sort of a direct replication of what exists today in stock trading.
Yeah, that would be interesting. Because I do believe that tokenization might help things like collectibles and other physical assets that are hard to trade readily. But I guess those right now, like a token on, I don't know, a bunch of cars that are stuck in a vault or something like that. I don't know, but would that be considered a security?
Yeah, so I mean, it's an open question. I think some things would, some things wouldn't. But you could think about say a work of art, splitting up ownership and tracking ownership of something like that is an easy use case. There's a lot of potential there. Liquidity and finding a good price discovery mechanism would be important. But I think there's a lot of potential.
Okay, so there are there's thousands of tokens out there. Do you think that there will be a whittling of tokens in sometime in the future, 5, 10 years in the future, and we'll end up with 1, 2, half a dozen that are just the ones that we use for certain types of businesses?
Yeah, there's been an absolute proliferation of tokens. There's, upwards of 10,000 tokens probably or more. I have to check my stats on that, but it's an absolute proliferation. I think where it's worth focusing is on which blockchains will be the stalwarts. We have sort of right now this competition for what we call layer 1 protocols and what will really serve as the enduring protocols going forward. And where asset issuers decide to build is a really important question right now. There are different trade-offs with different blockchains in terms of things like speed, security, and other important factors. Investors are actively and builders are actively evaluating kind of what those right combinations are. So I suppose to answer your question, we could certainly see a continued proliferation of tokens used for different purposes, but it's also really important to look at which blockchains will really endure, and that's a lot of what's driving the conversation right now amongst investors.
It's interesting. You mentioned NFTs. That's in the past podcasts, I've often asked that as a trend or fad question. What's kind of your take on it right now? There's obviously been a lot of really interesting or perhaps crazy NFTs that have sold for crazy prices. But do you see, just kind of from your personal opinion, real value in the underlying technology or the ability to do something like that?
Yeah, I think I definitely become down on the side of trend for that. I think that NFTs have staying power. The possibilities for creators to really take ownership of what they've built, different ways of distributing value, of bringing fans into into really deeper alignment with creators or teams. These are possibilities for creativity and commerce that are only just beginning to be explored, and NFTs are a really powerful mechanism. So I think NFTs have significant staying power.
One of the other buzzwords that I've heard over the last year or so is interoperability. I'm surprised I actually was able to say that in one word. But this idea of being able to connect multiple blockchains or go across platforms, is that something that you're finding is coming up in your own world? Do institutions want that? What's your take on that trend of interoperability?
Yeah, so institutions want simple ways to, and sort of individuals, right? Simple ways to be able to invest in areas or participate in areas where they see value. I think what you'll continue to see is the evolution of platforms that can create that simple access. For example, Coinbase itself, through using a smart order router, creates simplicity in accessing multiple venues from a trading perspective. Similarly, you don't have to worry about being able to move assets around to different wallets. You can simply go to Coinbase and buy an asset and hold it, right? So that sort of question of interoperability will be solved by and large by either centralized players or solutions that are crypto native and create easy access points for both individuals and institutions.
In your daily work, what's one big question that you get often that you would like to address right now and let people know? Just like this is what I get asked all the time. Here's the answer.
I regularly get asked, and I'm really struck by how frequently this comes up. Is it possible that I'm just going to lose my assets? And I really think that there's still a little bit of an overhang in terms of thinking of crypto as this digital bearer asset that could disappear. And the fact of the matter is, we have such a long history, as a sort of civilization of protecting bearer assets, whether it's gold or oil or timber, that sort of thing. Crypto is just one more of those bearer assets, except it's digital. I think there's a lot of misconception about the effort that it takes to get started. It's actually quite easy and I think really straightforward in terms of being able to safely participate and engage in crypto without having to worry so much about the security of your assets. So that's just something I think it's important for people to understand. Always need to do your due diligence and keep security in mind, but it's a lot less difficult than people might anticipate.
What's one long-term trend that you see playing out over the next year or several years?
So, institutions came in looking at Bitcoin as a store of value, as sort of that I think that drove a lot of the investment thesis in 2020. Now we see the majority also own ETH and continue to expand into additional assets. We now see institutions, for example, looking at DeFi and individuals as well. So I think one long-term trend that will play out over the coming years is just this natural evolution of the crypto marketplace, a deepening of institutional participation across things like derivatives, futures, options, sort of a level of sophistication increasing in the products available, but also an ability to express a view, combined with rapid development in things like DeFi. We've seen an absolute explosion in NFTs. So it's really that kind of engagement that I think is the long-term trend by both institutions and individuals. This isn't an asset class that will simply kind of mimic more traditional asset classes. Instead, there's so much that attracts builders that I think institutions will engage with. That this will really look quite a bit different in the coming years.
How about we move on to trend or fad, our speed round?
Okay, let's do it.
Inflation, trend or fad?
Trend.
Bitcoin as legal tender, trend or fad?
I think that's a trend, although it's a really open question. It's been fascinating to see what's happened, with El Salvador, as well as even, municipalities in the U.S. thinking about how they can interact with Bitcoin. I do think it's a trend for governments globally to look at digital assets, whether that's Bitcoin or a stable coin or a central bank digital currency. In one way or another, I think engaging with digital assets is undoubtedly a long-term trend.
Hybrid work weeks, trend or fad?
Trend. So Coinbase went to a remote first approach. So our globally, everybody has the option to work remotely. And I think we see that a lot with our clients as well. So I think it's a long-term trend.
Men's makeup, trend or fad?
Trend. I mean, I don't really know. I don't know, but I think people are going to be pretty accustomed to being on camera. And, it's hard to go back once you start putting on makeup.
Podcasting, trend or fad?
I have to say trend. I can't be a podcast participant and not.
Lauren, this has been great. I really appreciate your time and your insights. What's the best way for people to either follow you or learn more about Coinbase?
Best place to learn more about Coinbase is just coinbase.com or primebroker.coinbase.com for institutions. I'm on LinkedIn. That's the best way to reach me.
Fantastic. Well, thank you again, Lauren. I really enjoyed the conversation.
Likewise. Thanks so much for having me in.
And thank you for listening to another episode of Trends with Benefits.